Tesla stock recently rose above its 52-week low, now trading close to $200 at the time of this recording. A lot's been going on for the car company, especially in terms of its stock valuation, and investors are hoping that Tesla stock continues on an upward trajectory, eventually reaching a value that truly reflects the company's fundamentals. Hey guys, welcome back to Everything Tesla Stock. Following recent news with Tesla such as Citi upgrading its rating at the company, to Tesla CEO Elon Musk citing South Korea as a top candidate for a new factory in Asia, Tesla stock seems to have been responding positively in the last few days. After weeks of trading at all-time lows, Tesla stock is gradually going up the chart, and bulls like Gary Black and Ross Gerber have revealed the possibility of boosters for Tesla stock in the future, including with its stock price. What are the possible catalysts for Tesla stock in the coming months? And did investors who sold their Tesla shares at low prices make a mistake by doing so? Well, we're about to find out in this video, but before we do, if you like this type of content, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. In the past month alone, Tesla stock has shed 20% compared to a 6.6% rally in the S&P 500. Some drops in Tesla shares followed massive stock sales by the company's CEO Elon Musk after he liquidated some Tesla shares to finance his Twitter deal. Earlier this month, Musk sold another $3.95 billion worth of Tesla shares, which according to him was done in a bid to save the social media company. Citi analyst Itay Michaeli recently upgraded his rating on Tesla from sell to neutral, while stating several reasons for the valuation-based upgrade. In a recent note written to clients, the analysis stated that he believes the year-to-date pullback has balanced out the near-term risk and reward. He said, with the multiple contracting to approximately 30 times EPS in 2023, we feel that some of the prior baked-in expectations that we didn't agree with are out of stock. So our latest model update leads us to reduced near-term EPS estimates. We still find ourselves slightly above consensus for EPS in the fourth quarter of 2024. He further said that macro and competitive concerns are likely to remain an overhang with capacity rising, adding that in a hard landing scenario, Tesla's long-term competitive position will likely also improve and is potentially further enhanced by the IRA, the Inflation Reduction Act. Tesla will most likely benefit from the $7,500 tax credit by the IRA, as well as battery credits. In the same way, FED may eventually reconsider its decision to keep increasing interest rates in a bid to battle with inflation. Federal Reserve staff economists have recently briefed policymakers that the chances of a US recession in the next year had risen almost 50% on risks of slower consumer spending, global economic risks, and further interest rate hikes. According to the forecast, detailed in minutes of the November 1-2 Federal Open Market Committee meeting, it is predicted that the possibility for the economy entering a recession sometime in the next year is as high as the possibility of this not happening. This was the first of such warnings since the central bank began raising prices in March. The FED recently announced its fourth consecutive jumbo interest rate hike of 75 basis points, raising the benchmark federal funds rate to a range of 3.75 to 4%. The FED may realize that this could be causing a recession by continuously increasing interest rates. And with the interest rates in check, several stocks in the stock market will likely perform better. Since 2016, Musk has been promising Tesla investors and customers that the automaker will be able to turn its car into a self-driving vehicle, capable of operating as robo-taxis. Although Tesla is yet to reach this milestone, as drivers who use Tesla's autopilot, enhanced autopilot, FSD, and FSD beta systems are supposed to be ready to take over the driving task at all times, the automaker is making considerable efforts to see this technology working real-time in its cars. In a recent tweet, longtime Tesla bull Gary Black gave reasons as to why he believes that Tesla will record a high revenue figure in the fourth quarter of this year due to FSD. He wrote, "I would expect Tesla to recognize a one-time deferred revenue of approximately $1 billion in Q4, when FSD version 11 is released broadly in the United States at year-end. Most analysis will back it out of EPS at one time. The ongoing FSD take rate could increase once EV buyers know they can use FSD immediately after purchase. We estimate that Tesla has sold 400,000 FSD packages at an average of $9,000 since FSD became available. Assuming 300k was sold in the US and 40% unamortized deferred revenue, that translates to $1.1 billion in potential deferred revenue release. According to Black, the bigger impact could be if FSD take rates increase once that version 11 is released broadly, and if new FSD buyers can use it immediately. He added that currently the global FSD take rate is at about 8%, with the US take rate at 15%. Therefore, a 25% increase in global take rate would add approximately 15 cents to 2023 EPS. Tesla stock investor Ross Gerber recently disclosed that the simplest way to get Tesla stock to double is to produce the Cybertruck. Gerber further stated that this will be the game changer for Tesla next year, adding that with this, no dividends or buybacks would be necessary. In July, Musk revealed that production of this futuristic truck would start in mid-2023 at the Tesla factory in Austin. Musk said that Tesla is hoping to produce these cars in the middle of next year, with the first units to be delivered to owners beginning from around June or July. In recent news as well, Musk revealed some of the new features of the Cybertruck. According to him, Cybertruck will be waterproof enough to briefly serve as a boat, and it could cross rivers, lakes, and even the seas if they're not too choppy. In addition to the Cybertruck, the Tesla Semi and the new version of the supercar Roadster are already in the works, and production of the Semi is said to begin by December this year. There is no doubt, however, that a lot could change before next year. Wedbush analyst Dan Ives believes that there is a very nervous few months ahead for Tesla investors as they remain the ones at the receiving end of Musk's dealings with Twitter. While the Wedbush analyst maintained an outperform rating and a $250 price target on Tesla stock, he had told investors that the Twitter overhang still remains. According to Dan Ives, the Twitter circus show continues to go on, with Musk focused on turning the platform around while creating controversy daily. He further stated that there are three main factors to the overhang, which are the fear of Musk selling more Tesla stock to fund the Twitter deal, brand deterioration of Musk associated with Twitter, and Musk's attention all focused on Twitter instead of Tesla. He added that Tesla stock will likely remain low until deliveries begin in January, and investors get a better idea of the 2023 production and delivery trajectory. Ives had earlier this month removed Tesla stock from Wedbush's best idea list. In the same way, Morgan Stanley analyst Adam Jones believes that there is a need for Musk to clear the air on Twitter. According to him, there must be some form of announcement to break the sentiment around the Twitter issue and calm investors' concerns about Twitter. He added that some Tesla analysts and investors worry about potential spillover to the electric car company, stating that the Twitter deal could hurt consumer demand for Tesla, as well as commercial deals, government relations, and capital market support. While there is still a lot of controversy surrounding Musk's Twitter takeover, there may be a better way to address the concerns and fears if Musk probably hires a new CEO for Twitter. The now Twitter CEO had previously stated that he plans to set Twitter on a track to make it more significant revenue, after which he will likely hand it over to somebody else. Likewise, if Twitter reaches a cash flow break-even, this could help to address investors' fears. Musk had told Twitter employees at their first meeting that Twitter needs to bring in more cash than it spends, adding that if it doesn't, there's a massive negative cash flow, and then bankruptcy is not out of the question. Gary Black estimates that a cash flow break, even with a 33% reduction in ad spending and a 50% reduction in cash costs and expenses, will likely reduce Twitter's concerns and allow investors to focus more on Tesla's fundamentals. What other possible catalysts do you see for Tesla's stock price in the future? Let us know down below, and if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.